Okay, welcome to a capital hungry breakdown of GBPCAD. Of course, we are looking at a risk currency here versus a risk currency. So in the current market climate from a macro perspective, you do have a bit of a tug of war on these types of pairs, especially on the intraday. If you don't have any specific details to create one-sided volatility, especially as we've had market optimism, which supports risk currencies overall. And we've had certain individual factors support Canadian dollar strength as well as GBP strength, right? For example, we've had more speeches from political speakers such as Boris Johnson, or speakers from like the Bank of England, like Andy Haldane, as we saw today, and from previous weeks, who have been bringing more support to the UK economy and talking about more optimism, economic rebound. We've also noticed data has been a bit better, like when we saw the CPI figures as well as some of the jobs data rebound, and more talks about potential better trade deals between the European Union and the UK to come, right? So a lot of optimism. But on the flip side of this pair, you also have the Canadian dollar, which also gets a boost from overall market optimism sentiment as it's a risk currency. And you have oil supporting the price of CAD, right? Oil being above $40 a barrel. And we also have the Bank of Canada supporting Canadian economic rebound, talking about rebounded data. Very similar to what's happening in GBP, but just in the Western side, like the North American perspective of it for CAD, right? So what this does is when you're really looking at the pair on an intraday level, like we already have all of our levels and stuff mapped out, you can get very messy ranges where price can be very indecisive, and even very impulsive moves get corrected or just range right back, right? Because the pair is almost all, like when you're looking at this pair from a directional bias, it's almost like a ping pong horizontally, and that's how a lot of these risk currency versus risk currency pairs look. They'll have some trends in between some of these larger ranges, but over an extended period of time, when you're really zoomed out, it's just doing a massive ping pong between major zones, right? So you just want to be aware of that. And when you're trading these types of pairs, just play the key levels, technical ranges, and market structure, but be aware of what is impacting the individual risk currencies. You have to know, are there going to be any data reports for the Canadian dollar this week? Is there any data reports for the British pound? You know what I mean? Like, sorry, 1 second. One sec, I just got a call. Sorry, 1 second. Okay, sorry about that. But yeah, you have to know what's impacting the individual currencies from a fundamental level, whether it's any negativity or positivity from headlines or political disputes, geopolitics, data reports, whatever it may be, right? So you just have to be aware of that. But when we're looking at GBP CAD from a technical perspective, and we're really looking at the higher time frames, we are at some historical low points where you really have very strong price sensitivity from 2010, 2012 here, and a very strong zone being created around this range, right? You can see very flat candle bodies creating a strong support. This quarterly candle period is still fairly fresh and does have potential to peak a bit higher in this overall range here. And we'll look at that better when we see it on the monthly. And we do have the potential to correct some more of this downside move or peak some better sell areas before we continue to range. But what's key to note is don't be surprised if pairs like this just peak its previous high point from an intraday perspective, then you have its previous low point, and for months or for years just plays within these ranges, right? So don't be surprised if something like that happens with these risk currency versus risk currency pairs. So we can see very strong support here. Sellers failed to break the previous lows from a historical standpoint. Buyers jumped into the market, corrected that downside move. fail to break previous highs, of course, because you have that constant macro battle of which currency is stronger. I do see the potential as we fail to, as this previous quarterly candle looked a bit smaller in size, and we've already broken the wick of the previous candle, and this candle already has a significant lower wick. Plus, we do have very significant fresher GBP optimism versus Canadian dollar optimism. And I do see the potential for oil to start falling back a bit below $40 a barrel, which can give that one-sided boost just from an intraday perspective when we start zooming in the time frames. But other than that, we're really just on a macro perspective playing these ranges, which is massive ranges, but we want to start zooming in to see how we can take advantage of this and what it's looking like on the intraday perspectives. I like how weekly failed to break this low so far. We corrected this downside move and had a bullish engulfing candle. The previous, the following week did close with a small minor bearish candle and did grab liquidity to the downside. This candle has already made a lower size wick as well and grabbed some liquidity to the downside. If we can break the high of this previous candle, I see a lot of potential to correct this downside move and just play the range in here and then possibly reject and come down and see how it goes from there. Just looking at the weekly, you have a strong price sensitivity area here, low point here, low point there. I would only begin to look for sells at a break below this weekly candle to begin with. You can see here we're breaking minor bearish structure. We're developing intraday bullish structure, very strong bullish engulfing close previous daily candle. This daily candle can potentially just be making a lower wick and grabbing liquidity to possibly break these highs. What we want to note is on the daily, we also have this tighter range from about here to here, where this was the initial intraday high peaked and that created a lower high. These were the lows peaked. And you can see exactly where we rejected previously and are rejecting now is that previous high point. So we don't have really one-sided volatility to show us continued buys, but as long as we remain in this bullish structure, I see these buys as higher probability than sells is what I'm trying to say. I would only see sells like a break below like 1.69. So this is better. Look at that here. It's not a, you don't really need to draw a trend line just to show that some of the bullish structure that is developing, showing that we had very strong seller structure that was developing here with lower lows being developed, lower highs and sell-offs, etc. From a peak point that broke this area. As long as we remain in this bullish structure, I see potential for further buys, especially as we're breaking above a lot of this price sensitivity, or we did yesterday, and we can use it as potential support now. Yeah, we already have our key levels and everything mapped out too. So this is the bullish structure that I was seeing developing. You can see price, sorry, you can see price wicked a key level. These key levels, by the way, were mapped from the previous GBPCAD webinar. So if you want to see exactly how they were mapped, just go to the main feed, go to GBPCAD here, and then just watch this breakdown webinar to see how we mapped it. Same way we always map levels. But anyways, you can see on an intraday perspective, we had a wick and liquidity grab point at this low, right? Or when we were still in overall bear structure. So let's zoom out a bit. At this point, when we wick this low, we're still in overall bear structure. Okay, so when we came up and we sellers are closing off some of their orders after peaking a new low point, which is also hitting a higher time frame key level, Buyers jump in to relieve some of that order flow, right? But overall, you're still in the bearish market structure, right? So sellers jump back in the market. Then they fail to break, and there's not enough sellers order flow or one-sided market volatility to break below the previous low point formed. Okay, that's why I marked this off as the first liftoff point for a potential bullish market structure, because then you're getting the first signs of impulsive buyers candles instead of corrective buyers candles, where this was just pretty corrective slow upside, where this was like in pretty much 1 or 2 4-hour periods you fully corrected the downside move and this downside move here, right? Then price comes down, creates another higher low and a fresh candle body support at our already predetermined higher time frame area of interest. Then it breaks the bearish market structure here, and here's when it retests again and still maintains structure. Now we're getting this candle body support. So right now, the only thing is when we still continue to just look a bit left to look at buyers and sellers strength, we really need a significant break above these wick points here and these previous high points where we also pretty much peaked and failed to break just in the last week or two. And that's exactly where we are reacting now, which is also a predetermined key level higher time frame area of interest. So what's safe to me is either we get a pullback to 1.703 for buys and continue to maintain this bullish market structure, and this pullback will be generating enough liquidity with a possible intraday support formed, and then enough buyers jump in the market to have enough order flow to break these previous intraday highs. Or if we break below 1.695, all GBPCAD is going to do is start to create that range where it is just going to start to ping pong and then play down and come right back down to 682, right? It's very hard to see what is stronger between the British pound or the Canadian dollar in this current market climate because of all those reasons I'm telling you and that tug of war, right? That's why you're seeing previous lows failing to break and previous highs failing to break. And this has been going on for almost a month now, this type of market structure, right? So that's what I pretty much see. Let me clean that up a bit. So obviously the safest would be if we had a clean break and retest. Like if we had like very similar to what was looked like it was going to happen here. We had a very clean breakout, but the following 4 hour just melted and closed below the key level. And then it just ranged back, right? Very similar to how you have these minor fake outs. You need more confirms when you have that breakout. So when we have this potential breakout, if we do get it, what I'm looking for, if we come back, I'll map this out as I'll set this as a key level alert, 1.713, is if this alert gets triggered and we come back down, I really want to start looking at the lower time frame structure to see if we're developing a hard candle body support area, showing a shift, showing stronger bullish market structure forming, or getting an intraday support form there, not just getting like a candle snapback. You can see all these fake out plays here that look like they were going to break out. Then the following candle or two just snaps back into market structure, right? Many times here. I'm looking for something like when it breaks out like this, it comes back and does this. So you have the pullback, but the pullback, you see the momentum of sellers slow down as you're coming back to the area of interest here and an actual support being formed to continue and show buyers pressure there, right? That's what I'm more looking for. Like this, or like this, right? So this is the breakout, the retest, the support formed, and you can see the momentum slowing down of sellers. This was the breakout, the retest, the support formed. Then you can see the buyers jump back in the market, but you didn't have those same types of confirms here at these breakouts. And here you're more getting a resistance formed rather than a breakout and a support. You get what I'm saying? So that's why I would look for exactly this type of repeat of market structure, but imagine that right here. And that's a nice buy to a new high, or a pullback to test this market structure and grab more liquidity that way. Otherwise, safe sells below 1.6995. I would say sells at 1.713, but we already missed the entry. This is a 4-hour candle as well. I don't really look at this pair too often, so I just apologize about that. It wasn't like I really do not look at this pair often at all, but Yeah, other than that, I don't see, unless we come back to retest 1.713 during London and fail to break on the lower time frames, we can possibly see a scalp back down, a scalp sell. Otherwise, I wouldn't enter in the middle of nowhere right now. And then, of course, only sells below. If you guys read the trade room, this is some of like the mixed sentiment I'm talking about. So you can see most GBP dominant pairs against safe havens, of course, like the US dollar, against the Swiss franc, against the Japanese yen. It's been very strong bullish, right? Same thing if you look at like CAD JPY, or if you're looking at USD CAD, it's the opposite. It's falling right now, right? Because of course CAD has had strength as well. So um, you've had some support from Bojo comments, from Bank of England's Haldane comments, which is like we talked about. Sorry, not there. Over here, Bank of England Haldane, so far V-shaped recovery is still expected. Then on the flip side for CAD, you can see oil is still in bullish market structure, respecting key levels. It looks like it can potentially break previous highs. If it fails to reject here and comes back below $39 a barrel, that is more potential bullish pressure for GBP CAD, as that would weaken CAD, right? But you can see right now it's holding that structure. And of course, with the Bank of Canada sentiment last week, they were also providing support for the Canadian economy as well, very similar to what Bank of England is doing for the British pound. Today is the 21st. We have CAD retail sales in the morning at 8:30 in the morning. We'll look at that closer. We'll look at previous CPI figures. I think this retail sales, when we see the forecast of it, let me see the forecast. 20%? 20% the poll? That's crazy. That's high. But anyways, core CPI on Wednesday. Crude oil inventories will also, of course, impact oil, which can impact CAD. And then we have the GBP retail sales on Friday, which I expect should be better, as of course the UK consumer inflation, the CPI report last week, which just shows consumer inflation health and jobs data, was a bit better as well. So like these all sort of work hand in hand. Like when you have a lot of employed people and they're getting paid well and the consumer inflation is high, obviously it's going to in turn mean they're spending more in the markets and the economy, and retail sales will be higher, right? So just be cautious of that. Today is the 21st, so Bank of England speaker on the 23rd, from talking about from lockdown to recovery, the economic effects of COVID-19. So just be wary of that for any impact on the British pound. And no speakers for CAD this week. All right, any questions about UCAD? Or sorry, GBPCAD. I'm gonna take the silence as there's no questions. Everything made sense. From the higher time frames to the lower time frames, talking about the risk currency versus the risk currency. I have no idea. Just looking at intraday structure, buyers versus sellers, imagining what type of market structure and repeat we would want if we did get the breakout. You get what I'm saying? Or looking for better buy points. We know what data reports we have impacting it this week, any political speakers, headlines, mixed sentiment for this pair specifically. What? Looking like a lot of volume this year? High this week. What do you guys say? Where's Alex? I have no idea. Okay, maybe let's just see. Every time price peaked the high so far, it will go about like 200 pips. That'd be a nice target. So nobody has questions? If you guys don't have questions, I'm just gonna save this and send it over to Vimeo, and I'm just gonna label this chart and stuff.